So we have another one here, guys, dumped by Wall Street, and that is Google stock. So let's talk about it. What's going on? Is it really in a very dire situation? Or this dump is just temporary and will come back roaring up tomorrow again on Google? We'll take a look at through the lens of technicals. I'll take you over some reasons as well why this sudden sell-off we are seeing in the post market, even though we initially had a good climb, but then price action is what is our primary focus. Will be how to trade it going forward from here. We'll talk about all of that in this video. Once I also let you know, none of this is any financial advice, only for education purposes, just sharing my opinion. Please do your own thing. So again, well, just like any other stock, Google came out with their great earnings, came out with flying colors here. However, Wall Street is being very picky, and they're dumping and punishing any stock that just doesn't fit in their narrow criteria. Now, Google, first, I want to surface the positives on Google, and there is only one problem that Wall Street is just not letting it slip. But we'll get to it. It's a bigger issue as well, how you want to look at it, but we'll get to that in just a moment. So the first points I want to go over are the beat on the earnings, the beat on the revenue, great stuff. When you see 2.5 billion surprise to the upside, even if it's just 2.24%, but when you look at in the realm of like 100 plus billions, guys, here, right? We are talking in a complete different range of revenues. So that 2.5 billion is a strong beat as well. SMC also did that though. That's why the price is going up. Check out that video on my channel though, guys, if you're interested in SMCI. Now, the beat on the estimates, no doubts there. And the problem is coming in from their spending, the capex. So market is punishing, or Wall Street is punishing anything right now that has to do with a more spending on the AI. And this is a quick summary on the Q4 revenue up 18%, that is to 113.8 billion, led by search and cloud. 2026 capex to reach 175 to 185 billion. Now, why this is a bit of a bummer in the price action, and that's the leading cause of, in this case, in the post market, a bit of a deflation in the sentiment of Alphabet, is that's because earlier, well, our analysts had expected on average the spend of only about 115.26 billion this year, but Alphabet or Google is going up all the way to 175 and 185 billion. So that's a bit of a bummer, and that is what negating all the beautiful things that Google is doing. No doubt they're the best in AI right now. Gemini has left behind ChatGPT, everything, okay? It's way ahead of ChatGPT for sure. Now, but that's where their spending is just not that even in line with the analyst, or not even in close proximity. Even if it has to be high, it's not even in close proximity. It's almost shooting for 75% higher than what analysts expected, and that's going to constrain the cash flow, and Wall Street doesn't like that, right? They want to have more profitability, higher margin, or higher net free cash flow. And also, though, I read it another way that initially when Google, approved $75 billion of stock buyback, they only purchased or repurchased 5 billion so far of the stock's buyback. So they still have $70 billion at their disposal for the stock's buyback. And so that's where I do think the downside is protected already on Google. All right, we'll now talk about the technicals. So even if dips comes on Google, which it is holding that yellow zone, the zone that I do Google coverage with my members on Patreon with on the 25 plus stocks coverage. If you are interested in all of that, details you will find in the description of this video. And I provided this yellow zone that as long as we can still hold above it, overall structure will be fine. And Google is still doing that. Okay, Google is still holding it fine. I don't see a problem on overall side on Google as we continue to hold above 328. If we slip lower, we are in the weakness territory, and that may slip it into the lower direction. As I said though, Google does have a downside protection right now. The stock repurchase, they still have a lot of money set aside to do buyback. And it's good that as if its stocks comes down, they have enough of that money to do buyback, because that's your protection. All right, the company is protecting the downside, okay, by doing the the repurchases. But anyhow, trend could be strong as well to the downside. And all this climb is also compounded together with the stocks buyback. I will quickly show you Nvidia was doing this quite a lot before it had its all AI run up, because it was anytime Nvidia would dip a little bit lower. Let me show you real quick those times on Nvidia. That was wow. I think, yeah, it was back. Yeah, was the initial gap up of it, right? Where the AI story really started, right over here. So right over here, Nvidia started doing its buybacks, okay, right from this area. Any dip that you would get on Nvidia, no one knew back then what Nvidia is going to come out with the AI. The AI narrative wasn't there, okay, and it was all about Nvidia doing the buyback of its stocks. Most of it, this run up was by that, and then it had a technical breakout with that whole AI stuff that came out that really pushed it up. Okay, so yeah, so buybacks really can defy the gravity is what I'm trying to say. And Google has, as I said, $70 billion worth of stock buyback put aside to do the shares buyback on its stock, I mean. All right, so you do have a downside protection on this thing. In the long run, definitely any opportunities you get is for a buy, but for trading purposes, as if like from where the price is, as if it breaks below 328 tomorrow and we slip lower, we will be in the weakness. We are overall fine until 328, but we are in the multi-day weakness. Let me actually highlight that. So overall structure though is still holding, but multi-day we are weak already below 337 and 68 cents. So for a couple of days of trade, the direction is still to the downside on Google here. Okay, we have lost that level, 338 area. Technically, we'll have to get above that to mark this multi-day weakness completed, and or you can use the 335 as well, 335 to $338 zone. All right, above that things will be fine technically. So if you want to wait for extra confirmation for the trading purposes and where the strength is back again, you can let Google go above 335 to 338. It is technically not that bad here. Google is still holding fine in my opinion. Yes, they that's the whole thing. They are spending a lot of money on the compare in relativeness to what analysts expected, and that's where the bummer is. But rest all things are looking good on Google. Even in the long run, I don't have any position right now for the long-term portfolio. I'm not planning to buy here. If you have a long-term position, if it breaks below 328, consider taking some partial profits here. I would personally like to buy Google again if it gets cheaper. Right now, I'm not going to buy it here. Even if it goes up without me, that's okay. Anyways, guys, that's all I had for you in this video. And with that, we'll see you in the next videos. Please hit the like and subscribe, guys. If you find my videos valuable and helpful, it helps out the channel a lot. All right, guys, bye.